All right, learner, welcome back for another deep dive.
Yeah,
This time we're wrapping up our current source material with what we've been calling Book 5.
right.
And it's mostly from Adam Smith's Wealth of Nations.
Yep.
I think it'll be really interesting to connect the dots from everything we've talked about before and see how those principles play out in the world of government finance and kind of like the bigger picture of how societies are structured.
Yeah, absolutely.
So today our mission is to uncover the core themes of this book, things like government spending and how they get that money, how they handle debt, and even the roles of education and religion, all within this economic framework.
Yeah, and we'll see how these ideas really build on everything we've explored so far. We're
Exactly.
moving from like the nuts and bolts of wealth creation to how the government itself interacts with all that.
Right.
It's not just a separate entity, it's part of the whole economic ecosystem.
Totally.
And it impacts the produce of labor and how society organizes itself, just like we've been discussing.
Okay, so let's jump right into chapter 1, which is titled Of the Expenses of the Sovereign or Commonwealth.
Okay.
And the first thing that jumps out to me is the difference in spending between those old European monarchies and what modern states have to deal with.
Yeah, it's not just the amount, it's what they're spending it on that's really fascinating.
Right.
Like ancient monarchies were super lean.
Okay.
Their main expenses were the sovereign's own household, the costs of justice, and get this, justice was often a way to make money through court fees
Interesting.
and local infrastructure.
Yeah.
That was mostly on the community to handle. They'd use their own labor to maintain things.
So basically, the government's role was pretty limited back then.
Exactly.
Which is so different from today, right?
Oh, yeah.
Now governments have way more responsibility.
Huge difference.
We're talking national defense with professional armies instead of those old militias, the administration of justice, which ideally would still pay for itself, but that's not always the case.
Right.
And then you have all these public works and institutions like education and religious stuff.
It makes you think about how much the government's role has changed over time.
Yeah, totally.
And it's not random. This expansion goes hand in hand with how complex society has become.
Right.
The more specialized the economy gets, the more we need things like infrastructure, education, and even national security to keep everything running smoothly.
Yeah, that makes sense.
It's like, think about it. A society based on farming wouldn't need the same level of government involvement as one with all kinds of industries and technology.
That's a great point.
It all ties back to that division of labor we talked about.
Totally.
And the more divided the labor, the bigger the government's role seems to become.
Okay, so let's dive into one of those big modern expenses defense. The text talks about how we went from those militias of shepherds and husbandmen, basically citizen soldiers, to needing professional standing armies.
And those early militias were actually pretty effective, especially since they were often led by the same people who were their leaders in peacetime.
Yeah, that's a really interesting detail.
It wasn't just a random group of people.
Right.
They had a structure and leadership that already existed.
Yeah.
But as societies got more advanced and people specialized in different jobs, they had less time to train for military stuff.
So those old militias kind of faded away.
Exactly, and standing armies became the norm, especially once some countries started doing it. Others had to follow suit for their own protection.
Just like a chain reaction.
Yeah, and it all comes back to how work and society changed over time.
And if we think back to our conversations about economic progress, this shift to standing armies makes a lot of sense.
Right.
We talked about how security is essential.
Absolutely.
Without it, all that produce of labor is at risk.
It's the foundation.
So even though standing armies cost a lot of money,
For sure.
they were probably necessary to protect all that economic activity we've been analyzing.
Totally agree.
Now, the text also talks about justice and how court fees could theoretically cover the costs.
Yeah, that's an interesting idea.
Historically, justice wasn't always a drain on the government's budget. Sometimes it actually made them money.
Right.
But there's a big caveat here.
Oh, yeah,
It's dangerous when the ruler benefits directly from those fees.
definitely.
It creates a conflict of interest
Exactly.
where making money might be more important than being fair and impartial. Like imagine a system where justice is basically for sale.
That's a scary thought.
To avoid that, the text suggests having fixed fees
Mm-hmm.
paid to someone independent And judges only get paid after they make their decisions.
Like the French parliaments, they had low salaries but got these epices, which were basically judicial fees.
So it was a way to encourage them to be diligent without letting them profit directly from the cases.
Right, it kind of checks and balances.
Yeah, it shows how even the little details of how a system works can have a big impact on whether it's fair and stable. And a reliable justice system is super important for a thriving economy.
Couldn't agree more.
It keeps contracts enforceable and builds trust between people.
Yeah, it's the backbone of a market economy.
Okay, so moving on, the text talks about public works and institutions.
Things like infrastructure, education, and religion.
Exactly. And it points out that historically, communities often use their own labor to build and maintain infrastructure.
A very direct contribution,
Yeah, everyone pitching in.
But when it comes to education and religious instruction, things that benefit everyone, the text suggests different ways to pay for them.
Okay, like what?
Things like general contributions from society, or having the people who benefit directly pay fees, or even relying on voluntary donations.
So it's about figuring out who should bear the cost for things that help the whole community.
Exactly, and this ties back to our earlier discussions about the general industry of the society and the importance of investing in human capital.
Right, like education makes the workforce more skilled and productive.
Which ultimately leads to more wealth for everyone.
But the question is, what's the fairest and most efficient way to pay for it?
Right, it's a balancing act.
Okay, so that gives us a good overview of government spending from Chapter 1. Now let's move on to Chapter 2, of the sources of the general or public revenue of the society.
This is where we get into how governments actually get the money to do all that stuff.
Exactly. And the first source they talk about is revenue from stock or capital.
Which basically means taxing profits, interest, and the transfer of stock.
Right.
And the interesting part is how these taxes can impact the whole economy.
Okay.
Like, they could end up burdening consumers with higher prices.
Oh, yeah.
Or even worse, they could discourage people from saving and investing.
So it's a tricky situation.
It is.
You need to find a balance.
Exactly.
The text also talks about taxes on the transfer of stock, like those stamp duties and registration fees.
They had something called the control in France.
Oh, right.
And those types of taxes could really mess things up. Well, they could make it harder to move capital around.
Okay.
And that could mean less money going towards productive investments.
So it's like putting a roadblock in the flow of money.
Exactly.
And the control was particularly bad because it was so unpredictable and open to abuse.
Yeah, it created uncertainty, which is never good for business.
This all ties back to what we talked about before. Capital is crucial for economic growth.
It's the fuel, you know?
Like,
And if you make it harder to accumulate capital,
or move it around freely,
right,
then you're essentially putting the brakes on progress.
it's a drag on the whole system.
Okay, next up we have revenue from land.
Okay.
And the text looks at different ways to tax land, like taxing the rent that landowners receive.
Which is basically the profit they make after covering their costs.
Right.
And that's generally seen as a fair approach.
Right.
It's capturing some of the value that's inherent in the land itself.
Right.
Especially ground rents. Those are a good target because they're like a monopoly profit tied to the location and desirability of the land.
So it's not really about the landowner's effort or anything. It's just the inherent value of the land.
Exactly. They're just benefiting from owning a prime piece of real estate.
The text also mentions taxes on house rent.
Right. And they suggest that the burden would likely be shared between the tenant and the landlord.
Interesting. So not all on one person?
Right. It gets spread around.
But then they caution against taxes on the sale of land.
Yeah, those can have negative effects.
How so?
Well, they can discourage people from improving their property
Right.
because they know they'll be taxed more if they sell it later.
And that could make it harder to buy and sell land in general.
Exactly. It throws a wrench in the whole system.
Which is a problem because land is one of those fundamental inputs for the economy, right?
Absolutely. It's where everything starts.
Okay, moving on to revenue from wages of labor.
Okay.
Here, the text analyzes what happens when you tax wages directly.
Which seems pretty straightforward at first, right?
Yeah, you just take a cut of people's paychecks.
But it's not that simple.
What do you mean?
Well, those taxes could actually end up being paid by someone else.
Like who?
Either the employers would have to pay higher labor costs,
Okay.
or the employees would take on less money.
And neither of those is good for the economy.
Exactly.
Higher labor costs make businesses less competitive.
Right.
And lower wages mean people have less money to spend.
It's a lose-lose situation.
The text even suggests that taxing wages could discourage people from working hard.
Yeah, why bother if the government's just going to take a chunk of your earnings?
And it hits poorer people the hardest.
Absolutely.
Because they're already struggling to make ends meet.
This all connects back to what we've been saying about wages being the reward for labor. And you need a workforce that's paid fairly to have a productive economy.
So taxing wages or the things workers need to buy can really backfire.
It messes with the natural balance of things,
The text also briefly touches on capitation taxes.
which are also known as poll taxes.
Right, where everyone pays the same amount regardless of income.
Yeah, but they're hard to implement fairly
Okay.
because it doesn't take into account people's different abilities to pay.
Right, someone making a lot of money can easily afford it.
But for someone struggling, it can be a huge burden.
Then the text moves on to taxes on consumable commodities.
Which is basically taxes on things people buy.
Right.
And here's a key distinction.
Okay.
They say it matters whether you're taxing necessities or luxuries.
Interesting. Tell me more about that.
Well, taxing luxuries is seen as less harmful
Okay.
because it doesn't directly impact the costs of production
Right.
or the standard of living for poorer people.
So it's like a tax on those who can afford it.
Exactly.
Whereas taxes on
Those
necessities.
are more problematic.
Yeah, because everyone needs those things.
Right. And taxing them can distort consumption patterns and drive up prices for everyone,
They give some examples in the text.
like taxes on salt, soap, and candles affecting the price of leather.
Right.
It shows how interconnected the economy is.
Yeah, you wouldn't think those things would be related.
But a tax on one thing can have ripple effects throughout the whole system.
Okay, so taxing necessities is a no-go.
Pretty much.
What about excise taxes?
Those are taxes on specific goods like malt, beer, and ale.
Right.
And the text points out that they can be difficult to administer.
Yeah, there's a lot of room for fraud.
Exactly. And it can be hard to track production accurately.
So they suggest maybe taxing the raw material malt more heavily?
Right. And then reducing taxes on the final products.
Interesting. So shifting the focus of the tax.
Exactly.
And this whole discussion highlights the importance of designing tax systems that are both effective.
Meaning they raise enough revenue,
Right.
but also minimize distortions in the market.
So that prices reflect the true cost of things.
Exactly. It's about finding the least disruptive way for the government to fund itself.
Okay, we've covered government expenses and how they get their money. Now we're on to Chapter 3 of public debts.
This one's particularly relevant today.
Yeah, with so many countries dealing with high debt levels.
It's a hot topic.
The text starts by explaining how we went from simple personal loans to governments borrowing money by mortgaging specific revenue streams.
It's like using future income to secure a loan.
Exactly.
And then they make a distinction between unfunded and funded debt.
Okay, what's the difference?
Unfunded debt is basically short-term borrowing,
Okay.
like Great Britain's interest-free debts and those exchequer bills that did have interest.
Right.
And the text highlights how important the Bank of England was in keeping those bills valuable.
So it's about maintaining confidence in the system.
Exactly.
They contrast this with France.
Where they had these billets d'état that were basically worthless.
Because nobody trusted them.
Pretty much.
So stable financial institutions are key.
Absolutely.
Then there's funded debt.
Which is more long-term,
Okay.
and it involves pledging specific sources of revenue to repay the loan.
Like a mortgage on future income.
Exactly.
And the text says that wars are the main reason governments take on these debts.
Makes sense. Wars are expensive.
Yeah, they often cost way more than the government can raise through taxes at the time.
So they borrow the money instead.
Right.
And it's politically easier to borrow than to raise taxes immediately.
Yeah. People don't like paying more taxes.
But the text is careful to point out that public debt has downsides.
Okay, like what?
Well, one big concern is that it diverts capital away from more productive uses.
Because the money's going to the government instead of being invested in businesses or something.
Exactly.
So it's like a missed opportunity for economic growth.
Right. It's a trade-off.
The text also talks about this idea of fictitious capital.
Yeah, that's an interesting concept.
What is it?
Well, the stock in public debt becomes a tradable asset,
Okay.
but it doesn't actually represent any real wealth or productive capacity.
It's like an IOU that people are buying and selling.
Exactly.
But it's not actually creating anything new.
Right, it's just paper wealth,
And this can encourage speculation
where people are just betting on the price of the debt going up.
without any real economic benefit.
It's a distraction from real growth.
The text also mentions that large holders of public debt can gain a lot of political influence.
Which can be dangerous.
Yeah, it creates a conflict of interest.
And then there's the ultimate risk of national bankruptcy.
If the debt gets too big.
Exactly. It's a real possibility.
The text talks about sinking funds as a way to repay debt.
Right. They're basically dedicated savings accounts for that purpose.
Right.
They mentioned Mr. Pelham's administration as an early example.
But they also point out that it's hard to keep these funds going consistently.
Especially during peacetime when there's less urgency.
Right. It's easy to let them slide.
And then the text gives us a historical overview of how much British debt grew because of wars.
Like the Spanish War, the French War, and the 7 Years' War.
They really racked up the debt during those times.
And they make a striking observation.
What's that?
Great Britain seemed to be unique in increasing its spending without expanding its resource base.
Even as their empire grew.
Yeah, it's like they were living beyond their means.
Which is a recipe for trouble.
This historical perspective really shows the long-term impact of accumulating public debt.
It's not something you can just ignore.
And it highlights how government actions can either help or hinder economic progress.
Especially when it comes to capital accumulation.
Okay, learner, let's take a step back and think about what this deep dive into Book 5 means for understanding economic principles.
Yeah, let's synthesize all this.
We've seen how government decisions about spending, taxation, and borrowing have a huge impact on a nation's wealth.
They're all interconnected.
And they build on those core concepts of labor, capital, and land that we talked about before.
It all comes full circle.
Here's where things get really interesting.
Okay, I'm listening.
These debates about how much the government should spend, how to tax people fairly, and whether public debt is sustainable, they're not just historical curiosities.
They're still happening today.
Exactly. They're at the heart of the economic policy debates all over the world.
And understanding the principles we've discussed can help you analyze those debates more critically.
We encourage you to think about the policies in your own country.
And see how they align with or deviate from what we've learned from Book 5.
So what does this all mean for you, the learner?
Well, hopefully it's giving you more than just information about government finance.
It should give you a framework for understanding the economic landscape.
And seeing how seemingly simple policy choices can have ripple effects throughout society.
From individual well-being to the overall health of the economy.
It's all connected.
Here's a final thought to ponder.
Okay, hit me with it.
Given what we've learned about public debt and how government finance interacts with the real economy, things like labor productivity, capital accumulation, and efficient resource allocation, what do you think are the biggest economic challenges facing nations today?
That's a great question.
The insights from Book 5 should give you a new lens to view those challenges and maybe even spot some timeless economic principles that are still shaping our world.
Yeah, it's about understanding the big picture.
Exact.
And how all the pieces fit together.
All right, learner, until next time.
See ya.